Grand Rising, everyone. This is MATTFRACTAL with another video. I hope you guys are doing good from wherever you are across the world. Today we'll be going over the dollar index. Before we jump into the charts, I just wanted to take time to go over the seasonal tendencies for the third quarter. So, as you know, we get right into these videos. We're in July, the start of the third quarter. In the third quarter, we have July, August, and September, 3 months. With the seasonal tendency for the third quarter, as you see in July, we create a Judah swing type move to run out the second quarter high. More internally, the June high right here. This red marker is the 15-year average of what the dollar index has done in the past, and this blue one is the 33-year marker. So we look for when both 15 and 33-year markers are going in the same direction. That gives us a high probability sentiment for smart money to trade inside of the markets and in the dollar index every year. So we're in 2024, third quarter. July usually runs higher, and then as you see, we create a high in July and we trade down for the most part of the third quarter. So it's that easy. We just pair up the 15-year and a 33-year average for the dollar index, and we like to look where they're actually following each other. As you see, they both rallied up here, and as dollar index creates the high in July, both markers go down all the way to about September, and then the 33-year goes down until about October. So we're looking for a bearish dollar for the third quarter. That's just how simple I look at my seasonal tendencies. So now let's get into the actual market. We're starting on a 3-month time frame on a dollar index, because as you know, each quarter is a 3-month time frame. So here is the beginning of that, or of the 3-month candle of the third quarter, July. And if you go in my past videos, I mentioned that we had this rejection block here that I'm currently watching. So I'll draw that out. And also what I noticed, we have this low, we rallied up to a high, and then we made another low, but this low failed to take this low, as you can see. So then this candle here, after we break it, this is not a breaker. Actually, we're going to elect to go with this one because the body tells the story, and this body is bigger than this body. So we're going to use this candle right here, the July 2019 candle, as our mitigation block. So I'll draw that out here. And as you can see, price failed to hit it in July 2023. So now, with that being said, if we have this rejection block and we're bearish for the third quarter until about September, October, we can probably see a down bar for the third quarter of the year. And where would it be running into? Where would be the draw? This mitigation block here. We also have this gap. And if you can see, this low failed to hit this high, so there's still some gap in here, as well as the mitigation block, making this a pretty clear draw for price. And that's how simple it is. We also have this bearish order block. We broke it here, and we traded back up into it. And as you can see, we had some bearishness. Then we traded back up, and we're failing to take out this high. We're reacting off of this rejection block created back in July, uh, in October, those 3-month candles. Second quarter, we tagged that rejection block, and now we are trading lower. Going down to a monthly time frame, leaving the levels on the chart. Let me zoom in actually. So we know that this, we're going to just mark this as a, excuse me, as a mitigation block. I'm just going to put MB plus. I'm going to put that at the right. I'm going to put that on the bottom. So the MB plus is just a mitigation block, guys. Going deeper into that price action, we have this last up close candle here, October 2023. So I'll just refine that as a order block. So OB plus is just going to be order block. And we're going to put it on the right side. Make it a little smaller. So we have this order block. We traded up into it here. And we also had this gap from this candle's high to this candle's low, which we traded into multiple times, failing to take out this high, right? As well as this fair value gap too, which it's trading into if I get them. Right. So we have this fair value gap, pretty clear. We trade up here, we react, and then also we traded up in there again in the second quarter, as well as this order block. And as you can see, the beginning of the third quarter, we opened. Zoom in. We opened here. We did a little bit of push up, not into the order block, but into that fair value gap. And now we traded lower. On the more immediate term draw of liquidity, we have this O low here. All right. So we'll just write that sell side liquidity. Put that on the bottom, on the left. So we have that order block, internal range liquidity, and now we have the sell side liquidity, which is going to be external. So that sets a stage for a market maker model, which we'll see when we go down to the lower time frames. I'll explain. Usually when price creates a range, and ranges are from when price creates a high, creates lower, creates a low, swing high, and then now we're in a range from this high to this low. If I grab a Fibonacci, high to low, as you can see, price traded up into a premium market, right, from the 62 to the 79% retracement. Now, once we trade up into that premium, we're going to be looking to offset our price in a discounted area. Where's the nearest discount? Sell side. So now we have a internal range premium looking to clear out an external range discount. That's going to be the basis of my theory of the dollar, especially using our seasonal tendencies, that the 3-month time frame or the 3-month quarter will be bearish for the dollar index. Going down to a weekly, which we're going to definitely need to focus on, especially as a day trader even a scalper, right? We're gonna need to focus on where's that weekly high likely to form, or where is the weekly range likely to draw to. So now you can see we have that order block being hit right here. We traded lower in the second quarter. Now we traded up again into that fair value gap on the monthly. So if I get another fractal, this high to this low, we have another fractal, another range fractal, high, low, trade up into a premium market, as we said. Order block right here. Could mark this out as well. O, B, plus. Put that on the top, put that to the right. So as I said, on that monthly time frame, when we trade up into a premium internal range liquidity, which is this order block in the premium, price usually tends to take out external range discount, which would be here. This old low as well as this one, they're pretty close. So this would be like a sell side liquidity pool. And as you can see, price tanked the last couple of weeks to clear out these old lows, which is just sell side liquidity. As well, we had this gap here. So it wanted to fulfill this fair value gap here. So as you can see, our market is coming together. I'll mark this out as a fair value gap, FVG plus. And we'll leave this right here. So we have this fair value gap. Now, if I'm looking at this as a market maker sell model, which this is the smart money reversal inside of that fair value gap on the monthly time frame, internal range premium, we're going to be looking for a longer term run on the sell side liquidity, which would be the discount, the external range discount level, right? So yes, we have this fair value gap, which is a discount as well. But overall, with the dollar being bearish for the third quarter, I'll be looking for more continuation to the downside. So for next week, what would I personally be looking for? As you can see, we broke these last 3 down candles, which would in turn create a order block. So let me just draw that out using this body, because 1, 2, 3 consecutive up close candles will be considered as an order block. So let's draw that out and mark it OB plus. So that first level here, we can open next week, trade higher, hit this order block, and then continue to either trade lower to the low end of the fair value gap, or just completely run lower to complete the sell model. Also, if you notice, from this candle's low to this candle's high, we do have a gap here. And that order block, it cuts right through about, the halfway point of it, which is going to be a consequent encroachment if you guys follow smart money concepts. So consequent encroachment, not to get fancy, is just a way of saying the 50% level of a gap or a fair value gap. So grabbing a tool that would show you the 50% from this candle's low to this candle's high, you'll get somewhere around here where this order block is sitting. So I like that. I like the idea of price opening next week, probably fiddling around on Monday, catching a lot of traders offside as it usually does. Tuesday going higher, creating that high of the week, and inside of this gap plus the OB, which is pretty powerful, and then continuing to trade lower. First target would be the low end of this fair value gap, which we failed to hit last week. If price wants to trade higher, there is another fair value gap here that we can also watch out for. FVG plus. So we have this fair value gap here. So if price wants to trade a little bit higher, we can also, if price blows through this order block level here and this first fair value gap, then the draw on the upside would be this fair value gap here. And then we would have to see if price wants to reverse here. And then once we see some bearish signal, then we can take the market down into, as I said, the high end of this, or sorry, the low end of this fair value gap from this candle's high to this candle's low. There's that gap. We traded lower into that 50%. We still failed to close in the full gap. Going down to a daily time frame. All right. So how would this look on a daily? All right. Have that sell side liquidity. Weekly fair value gap. As you can see, that order block on the weekly time frame is inside of this daily fair value gap, right? So me personally, I would be looking for that as a catalyst. So using the weekly level combined with this daily fair value gap, I want to see Monday play around, Tuesday trade higher into this gap, as well as that order block on the weekly. And then we'll have a range from this swing high here down to this swing low, trading up into a, as I said again, it's the same thing with the ranges, but it's just fractal on every time frame. From this high to this low, if price trades up into this internal range premium, which is going to be the fair value gap, 62 to 79% retracement level, we can then see a run lower to clear out the external range discount levels, which would be the sell side liquidity old lows, right? So this will be my market. Let me just mark this gray. This is how I would set up the dollar index going for next week and probably the week after to see this sell side liquidity get taken, completing the market maker sell model. We have the initial run up, consolidation, run back down into it here. We trade higher, we accumulate here, taking old lows, and then we rally, creating a smart money reversal. We trade lower break structure. This swing low here got broken. Then we have a range from this high to this low. We trade up into the internal range premium. Then we trade low, taking out external range discount. Then again, trading up into a internal range premium order block. Then trading down into external range discount level. Here, since we are in the summer months, price traded up pretty aggressively on the sellers, taking out old highs, which sellers would have their stop losses in, take them out, but then continuing the model, started trading lower. And now we're setting up the stage for another internal range premium, being this fair value gap and this high to this low, to take out the external range discount, complete that weekly fair value gap here, and then eventually completing that sell side liquidity. Right. So I hope you guys got some insights on how I use the seasonal tendencies, break down the market from a 3-month standpoint down to the monthly, down to the weekly, and then down to the main time frame, the daily chart. So before we end this video, um, like, subscribe, and if you're not already in timed precision, what are you guys doing? You guys need to join, right? We have a good amount of people in here. We're just sending market analysis mostly every week. But as I told you guys, I want you guys to look out for the course. I'm really putting a lot of effort into it. I'm taking my time. I'm not in a rush to give you guys anything mediocre, because the company name is Time Precision. We have to time our precision in the markets. And if I don't get that across to you guys in the best way, I feel like I'll be doing you guys a disservice. And on top of the course, we will be opening up our private Discord. It's going to be something totally different than the Telegram. For now, the Telegram, we do post our analysis and our live price action. But once the Discord does come out, we'll be toning down on the Telegram channel more so as um, a frequently asked question type of thing. Like if you need any answers on markets, I'll be here, and my admin will be here to answer your questions in the Telegram channel. But if you guys are looking to further your precision in the market, that's when you will take it upon yourself to join our community, our private Discord. Once you join, you'll get access to the course. You'll learn everything that I know. And then being inside of the private Discord, you'll get to see week to week how we basically analyze the markets, stay still like a sniper, and only pull the trigger when it's time, right? So I hope you guys enjoyed. Like and subscribe. Let me know in the comments how you like the videos and what you guys want me to talk about more. And yeah, MATTFRACTAL out.